efficiency, predictability, and control are critical. Highlight if it's the main one, whereby theory is applicable. So which areas basically, or which institutions whereby you can apply. I think on this one we are done, but for the sake of repeating. So as I handle this question, I want you to identify where we were last time. So as I handle this question, please try to find out where we were so that you can move there very fast. Now, basically, talk about Max Weber. It's about bureaucracy. A lot of processes, a lot of procedures. Bureaucracy basically means what? You follow a lot of processes, a lot of procedures. Now, you are asked where situations, which situations can be able to force you to use this Max Weber bureaucratic theory. Now, the situations are listed here. The situations have been listed here, and the first one, just a minute. So let's look at the situations. Number one is public institutions. You know that in the public institutions, there's a lot of bureaucracy. Applying for a document, basically, it normally takes a lot of time. So basically, you know, in the public sector, the process is normally very brief. Because what? To be able to what? To check on the aspect of what? Reduce unethical behavior. Because in the public sector, basically, that is our taxes, me and you. So that's why you have to put a lot of process so that somebody don't find it easy to be able to misuse somebody's fund. So we talk about the public sector, government agencies often require strict adherence to laws, rules, and procedures which align with what? Weber's what? Creative principles. So if you look at the government sector, application for any, even a document, even a birth certificate, basically, there's a procedure. You cannot just apply the way you want. There's normally requirements, attachments. So there's some aspect of what? Bureaucracy. You cannot just use shortcut to be able to what? Get those documents. Number two is large manufacturing firms. Basically, they must be bureaucracy because when you when you're doing manufacturing, one thing that will happen is that you produce in large quantity. When you're producing in large quantity, there's bound to be aspect of quality measures that have to be in place. So if you compromise the process or the stages, then basically you can compromise the quality. So to ensure that you continue producing the right quality, you must ensure that what those rules, regulations, and laws are followed to the letter, or they are adhered to the letter. That is basically called what? Call it what? So that where the repetition, and quality control are critical, bureaucracy ensures uniformity and efficiency. Because when you're producing goods, basically, if you're producing loaves of bread, there's aspect of uniformity. If it's about 600 grams, you produce 600. So you cannot find something, some are 30, 50. You normally ensure that what? In terms of quality, in terms of quantity, then the quantity remains the same. Even if you produce what? 1,000 or 1,000,000 units, that is very, very important. It's a very important aspect you have to look at. Another is what? Healthcare institutions. Basically, matters health, there's no shortcut. In matters health, regulations have to be followed to the letter. Because if you take shortcut in matters health, somebody can die. You can use, you may do something that we may even what end up losing somebody or end up losing life. So basically, it's important. So also, a health regulation rules rely on strict protocols and hierarchical structures for safety and legal compliance. Now, talk about strict protocols. There are protocols we followed. When somebody faints, there's a protocol. When somebody has had an accident, has broken limbs, there's a protocol. You cannot come with your own way of doing things. There's a way in which what? When an ambulance comes to the site of an accident, there's a protocol. You don't just come and carry people. There's a way they do their things. So basically, that's a procedure. So that if you go against the procedure, you can even be sued. You can even sue God, of course. So basically, it's important that what we look at those aspects of in health, because what the nature of the institution. When we talk about healthcare, healthcare is very what is very, very critical in, and also is an area that if you make a mistake, then basically you may end up what causing a lot of damage and even what loss of life may occur. Then number four is what? Military and police forces. This is where order is normally being used. In military or in police, you don't question. If you're told to march, you march. If you're told to move forward, you move forward. If you're told to shoot, you shoot. Basically, that's called what? Order. So in those cases, you don't have time to reason. You don't have time to reason that this is what, no. What happens is that in this case, you need to ensure that what? You follow the order. If you want to resign as a military officer, there's normally what? A rule to follow in ordering. So basically, that is very, very important. Very, very important to look at. Then next one is regulated industries, e.g. banking and aviation. Now, when we talk about banking, in the banking sector, I don't know if you're going to the bank, and sometimes you even feel bad. You're told to do a signature, and then your signature varies slightly with what you had signed when you're opening an account. Then start feeling bad. Say, that's why you denying me my money, and I'm the one, you can confirm my face. Because there's what's called protocol. We can know you, this is you, but basically, you have to give a good signature. You have to sign the way you normally sign. That is called protocol. When we talk about aviation, flying of planes, landing of planes, there's a protocol for starting a plane and flying a plane. There's a protocol for landing. You cannot land the way you want. You have to follow certain procedures. If you miss those procedures, basically, you can bring a you can end up causing a very, very, very big accident. So it's important that we look at those aspects very, very, very carefully. So I don't know if that question is asked well. I don't know if the questions I answered, or is a question you need me to elaborate again? Any question? Any question? I think there's somebody who asked me to look at that question, and I think I've been able to repeat it. So if you have a question, okay, I'm guessing. Let me get a clarity from what I think this is Ambuche. Ambuche is asking. The question asked when. It's confusing because what? They asked discuss situations. Now, let me read that question so that we get to understand that point very clearly. That highlights 5 situations. Situations when you apply the theory. Maybe the way the structure is the way the questions are, the answer are put could be. Now, if you look at the introduction part, how I've introduced it. Look at the way the answer is. Look at how I've introduced the answer. That Weber's rule theory is best suited for structured, rule-based environment. Is applicable in the following situations. The first situation was in the public sector. If you're in the public sector, whether county government or national government, basically you apply, or person you apply the rules. In large scale manufacturing. You see, the answers look a little bit, I don't know, there's an aspect of non-clarity, but if you look at how I've been able to introduce them, I've talked about the situations that can happen. So I understand where Ambuche is coming from. Ambuche, maybe you expected us to say, for example, the first situation could be areas where we need what? Strict adherence to law. That was what you ought to have. You are expecting that we say that number one, a place where there's what? There's strict adherence to law. Number two could be a situation where what? There is standardization, repetition, and quality control. Number two. Number three, we talk about what? An area which is what? Controlled by a lot of regulation, as a field or an industry which is what? Controlled by a certain authority. And then also what? Talk about what? Areas with the what? The strict regulatory framework. So basically, understand how you come. But basically, you can, in both cases, you can still be able to what? To answer that question, get the question right. I don't know if Ambuche now you understand. So understand what you're saying, eh? We have talked about, we are talking about, in this case, I've been able to talk about institutions, eh? But the question was asking when. So basically, maybe how I'm explaining the institution, that when comes in. But I understand your point. Your point is so very, very correct, because you talk about what? You talk about them, and then you give an example. For example, you talk about number one, you talk about, for example, industry where the strict adherence, then you explain then what? Example, public sector institutions. So basically, that would be also a better way of answering. That's also another way of answering. So I don't know if now it's clear, Ambuje. Is it now clear? So I understand now the situation. I think I've been able to illustrate the confusion. Now we're good. Now I'm asking because people are quiet. I can't really remember where we were. So I was asking, where were we last time? People are quiet. I don't know if we didn't indicate where we were, or we didn't indicate. So which paper were we doing last time? I may not be able to remember, so I'm requesting that in case anybody with an idea where we were last time? Anyone with an idea where we were last time? Anyone with an idea? We want to proceed? Or I just select a paper? Okay, since we are not sure, nobody is sure, I'll select a paper, then we can be able to look at it. So, I can see somebody has written something. So somebody has written something. Okay, so random paper, but I don't want a paper that we have discussed before. So random paper means I have to come down here. The ones that I'm sure we have not been able to cover must be papers which are now down here. So let me select a random paper down here. Good. This one here. April 2024. This one you're done. Group decision making, this one you're done. This one you're done. So can we see that one you're done? This one. Marketing research, this one you're done. Company text marketing research, that one you're done. Let me look at that question here. Business incubation, access quality, this one you're done. Incubation, you're done. This one now. I think this one now. Yes, this one I think we are not done. So let's look at this question, number 6, so that we don't take much time. We can proceed as a group. Now, this question is asking, the question asks, outline 5 types of decisions made in a company. So if you have an organization, which are some of the types of decisions that are likely to be made in a company? So I want to look at some of the types of decisions that are likely to be made. Number one is called strategic decisions. So these are long-term decisions made by top management. They define the direction of the organization, such as what? Entering new markets or launching a new product. So when we talk about strategic decisions, these are normally made by the strategic level management, which is basically the top level management. And their work is to ensure that what? These are basically, for example, we talk about issues like entering a new markets. That is the decision that has been made by top management. They sit down and say that now we want to expand. So we want to expand to which markets? We want to expand to Ugandan market. So basically, that is one of the decisions. The number two is what? It's called tactical decisions. The second one is called tactical decisions. Which are these decisions? Now these are made by middle level management. You see, strategic decisions are normally made by top level management. Now, these tactical decisions are made by middle level managers, means in between. These decisions focus on how to implement strategic plans effectively. For example, developing marketing campaigns or recruitment plans. So basically, those are called tactical. They are normally mid-level management decisions. So once the top level has made strategic decisions, now implementing them is normally what? Done at that level. The number five, we have what's called operational decisions. Operational basically means what? These are day-to-day decisions. These are normally decisions that happens on day-to-day. Operations, you come. Those are, we call them what? Daily decisions or decisions that are made on daily basis. So that these are day-to-day decisions made by lower level managers, so managers or supervisors to ensure routine tasks are completed efficiently, such as scheduling staff or managing inventory. So basically, operational decisions are made by what? The junior level or the lower level managers, and they are normally what's called day-to-day operations. We will give an example there. Now, the first thing we talk about, strategic number decisions are normally made by top level management, tactical or mid-level management, and then what? And then operational, basically, the lower level management. Then the next one is called program decisions. They say the way the name suggests what's called program, means they're repetitive. When we talk about this is how this system is programmed, means it can do a repetitive task day tomorrow without any problem. So these are repetitive and routine decisions made by following established guidelines or rules. For example, reordering stock when it reaches a reorder level. So things like when you want to order, do procurement, there's normally what? A program. There's normally a procedure to follow. So you repeat the same. If you're buying laptop for the company this time, you follow the same procedure. If you want to buy a car for the company, the same procedure applies. So basically, we call them what? We call them program. Because what? You every time you follow the decision or the procedure again and again and again, depending on what you're doing. Then you have what's called non-program decisions. This could be a one-off decisions that you make in a company. So that this involve unique or unstructured problems that require custom solution. For instance, handling a crisis or responding to what? Unexpected competition. So these are things that can come. For example, talk about responding to an unexpected competition or handling a crisis. Nobody is prepared to. A crisis comes sometimes when you least expect it. So when you want to manage that crisis, you may make decisions. That's what we call them what? We call them non-program. Means there are things that you didn't expect, but now since they occur, you have to what? You have to find a way of what? Of handling or managing those decisions. Very, very important. That's what you look at that. You look at it very carefully. Now that is on number 1A, question 1A. Question 1B, somebody has a point here. Let me see. Let me see what is being handled here. Consensus, participative, type of decision basically. Consensus, those are basically decision-making techniques. Wendy, consensus are called, these are called what? Decision-making strategies or techniques. I don't know if you're getting me, Wendy. They are not types of decisions, but basically, consensus is a decision-making technique, participative also. Basically, those are techniques, but the question was asked about what? Asking about types of decisions. So that's a very good trial. At least you've been able to get a clarity on that. So that's okay. Now, the next question here is asking, Joseph Mwala, the marketing manager of XYZ company, intends to collect marketing information to enable the company make marketing decisions. Identify first of such information. So you want to collect information about marketing. So the question asks, where can you be able to what? Or which areas can you be able to collect such information? Or where do you get this marketing information? Where can you get them? Number two, one is what? You can get them from what's called internal company records. You can look at the records of the company and get records about sales for the last 5 years, sales record, projection, and all those things. So sales data, you can look at the sales data, how sales has been happening, customer feedback on sales, financial reports, and CRM. CRM means customer relationship management systems provide useful insights into customer preference and business. So basically, you can be able to look at the records of the company, which include sales data, customer feedback, financial report. All this one what can help you what make a very informed decisions. Number two is what? Marketing research. You can also do research. When you do research, when you do marketing research, you are likely to come up with what? Or you're likely to come up with a very good marketing information that may not be available. So we say that involves systematic collection and analysis of data from surveys, focus groups, and interviews to understand market trends and consumer behavior. So you can also decide that, okay, I don't have information. What do I do? Let me do a research, and then from the research, I'm able to what? Get my findings. And my findings can be a source of very good information. So that is also an area you have to look at. Market, you can do a research, and from the research, you can get what? Some very vital information. The next question is on competitor analysis. The next source is competitor analysis. You can be able to what? You can try to analyze the competitor, and that one can also help you. So what do you mean? So information on competitors' pricing, you can look at how much are they pricing product in the competitor pricing. Promotion, I would say is that these two parties, that is the owner of the asset who is called the lessor, and also the person who has been given the right of use, that is the lessee, should basically account for that transaction in their books of account. And actually, we said they should account for that transaction in accordance with the IFRS 16. IFRS 16, we said that it is a new standard, which basically was issued to replace the old standard on leases, that is International Accounting Standard number 17. If you check on some past papers, you may come across that standard, International Accounting Standard number 17. It's important for you to note that that standard is no longer applicable. It has been scrapped and basically replaced by IFRS 16. So basically what we said for accounting purpose, this standard here classifies leases into three categories. We talked about the short-term lease, and we say that this is a lease whose lease term is basically 1 year or less. If you lease an asset, if you're given the right to use an asset for a period of 1 year or less, that is a short-term lease. Number two, we talked about the finance lease, which basically we said is a type of a lease which transfers substantially all the risk and rewards associated with the asset to the person who is called the lessee. So be that if, for example, you have leased an asset and the rewards and also the risk associated with the asset are transferred to you, you have the right maybe to use the entire asset. You have the responsibility to ensure, to repair, and also to carry out the maintenance work. As far as that asset is concerned, it basically means that the reward that is risk associated with the asset have been transferred to you, and therefore we say that that lease is known as a finance lease. But on the other hand, we said number three, we have an operating lease, which we said is a lease which does not transfer substantially all the risk and rewards associated with the asset to the person who is called the lessee. Usually, we say an operating lease is whereby, for example, you own an asset which you have reached to a number of tenants. For example, you own a commercial building, you have reached that building to a number of tenants. So that usually is an operating lease. So here we started by looking on how the leases are accounted for by the person who is called the lessee, of which we say that this person here should actually recognize two items, should compute and recognize two items in his books of account. One, we said he should compute something called the lease liability. The lease liability, of which we say that lease liability, basically, this is an obligation to do what? In the financial statement of 𝐎𝐲 Limited, the lessor, for the year which ended 30th of June 2023, 2024, 2025, and 2026, the marks allocated there were 10 marks. You can see the information which you're given here, very small information, and also the marks allocated are 10 marks. Now,
the first thing we need to do is basically to understand what you're required to do. We are required to demonstrate with the suitable calculations how this transaction will be accounted for in the books of account of the 𝐎𝐲 Limited. 𝐎𝐲 Limited is the lessor, who is the owner. Now, what you have said is that when the owner of the asset is accounting for the risk, the first thing he needs to do is basically to determine whether the risk is a finance risk or basically the operating what risk. That is the first thing we need to do. We need to determine this risk. Is it a finance? Is it an operating risk? Now, which information are we given? Remember, I've said there are usually 4 criteria which you can be able to use to evaluate whether this risk is finance or operating. I think the information which you're given in our question here is what we have in paragraph sentence number 2. Can we go to sentence 2? Sentence 3, actually. Sentence 3, and we are told there is contract, provided that the lessee shall be responsible for the insurance and maintenance of the building during the lease term. So the person who leases the asset shall be responsible for what? For insurance and also what? Maintenance. And also what? Maintenance. So the person who leases the assets, that is the lessee here, the lessee is the one to be responsible for this. Basically, what that means is that in this particular case, the owner of the asset, who is 𝐎𝐲 Limited, transferred the risk and rewards. Because I've said that if you have the responsibility of insuring a building, if you have the responsibility of maintaining a building, it basically means that all the risks associated with that particular building, they have been transferred to you. That's why you are required of a TVET. And this is what? This is a statement of financial. This is a statement of financial what? Performance. Statement of financial performance, which is basically for the year, which ended 30th of June 2025. 30th of June 2025. So that will be our title here. Will be our title. And basically, what do we start here with? What do we start by recording? We start by recording the revenue. The revenue of this particular ministry. Remember, revenue, you have said that, like the incomes. But basically here we don't use the word income. Incomes, we use the word incomes when dealing with the profit making organizations. But when dealing with the non-profit making organizations, basically we talk of what? Revenue. We talk of revenue. So which items of revenue do we have here? First of all, the first item we have the transfer from the exchequer. Transfer from the exchequer, this is the amount of money which was allocated to this ministry from who? From the exchequer, or basically from the treasury. So remember here we just need to have we can have 2 columns, maybe. Let's just have 2 columns. We have 2 columns here. And I hope you can see our figures up there. They are given in million of shillings. So we have the transfer from the exchequer. In other terms, I've referred to this as budgetary appropriation. This is basically the money which was allocated to this ministry from who? From the exchequer, or basically from the treasury. The transfer from the exchequer, that is 750. So below that, what do we have? We have the fees and licenses. So basically what I've said is that if you go to this ministry basically provides some services. It charges a small fee. So this is the fees, which basically is what is charged, and also what fees charged for the services offered. Fees and what? Licenses. That is still an item of revenue. So below that, we have liabilities for long-term benefits. Liabilities for long-term benefits, this is a non-current liability. We have the long-term borrowing, a non-current liability. Finance cost is an expense, is an expenditure. And then from there, we have the supplies and consumables used. I've said these are those items which are used in the office, like the stationaries and so on. That is an expenditure. Wages and salaries, an expenditure. Other operating, actually, we have other expenses. Other expenses, that is an expense. We have the transfer from other ministries. That is still a revenue. Transfer from other what? From other ministries. From other ministries. How much is that? Transfer from other ministries. I hope you can see that figure. Can you see that figure, Lydia? 𝐍𝐿, 𝐿𝐍, can you see that figure? Jeffa, can you see That figure, transfer from other ministries. Is it 75? Yes, it is 75. Then we have transfer to other. Transfer to other ministries is an expenditure. Then we have computer, equipment, and software. Those are what? Assets. Yes. And then we have motor vehicles, landed buildings. All those are basically assets. And then we have the revenue from exchange transaction. Revenue from the exchange transaction. So the revenue from the exchange transaction. Yes, let's continue. So basically, I've said that basically transfer from exchange transactions is also what? Is also a revenue from what? From the exchange, from exchange transactions. From exchange transactions, how much is that? That is 150 million. That is 150 million. Then from there we have other revenue. So other revenue, so we also capture that here. Other revenue. Other revenue is an amount of how much? Is an amount of 900. Is an amount of 900. Then from there we have payables. Payables, what is this? Who can tell us what is a payable? From this category, what we have covered, we have covered in other topics. Payable is what? Meridian. Zido, Kezia, Jefa. What is the a payable? A payable is what? A payable is what? I'm told by Jefa is the part of the creditors. Felix. Kezia, these are an expense. Kezia, this one is an expense. Hapana, this one is not an expense. Payable. Payable is a liability. Payable is a liability, is not an expense. That's that? Yes. In other terms, this is what we refer to as creditors in other topics. Sasa, Kezia, remember that. So reserves, this one will go to the statement of financial position. Cash and cash equivalent is an asset. Receivables is an asset. Inventory on consumables. Anytime you come across inventory, is a current asset. Is a current what? Asset. So basically, you can see we don't have any other item of revenue. So what we need to do, we get the total revenue. We get the total revenue. So that we move and we less what? The expenditures. But before we less the expenditures, give me the total assets. Not the total assets, the total revenue. Give me the total revenue here. The total revenue. The total revenue I'm given by Kezia a figure of 56.25. 56.25. Confirmed by Jeffa. Yes. So then we need to proceed and we list what? Expenditures. Expenditures, we have a number of them. I think we will start from where we have our first expenditure up there in those balances. The first expenditure we have should be the finance cost. Should be the finance cost. And basically we record now the expenditures in the first column here. And that is an amount of 150. Then we have what? We have the supplies and consumables used. The supplies and consumables used. So the supplies and consumables used, this one is an amount of 600. It's still an expenditure. So below that we have wages and salaries. Wages and who? And salaries. Wages and salaries, which is an amount of 1,500. So below that we have other expenses. Other expenses. So the other expenses is an amount of 1,800. 1,800, yes. So then from there we have transfer from other ministries. Remember that one was an income here or was a revenue. And then below that we have transfer to other. So this money transfer to other ministries. That one is considered to be an expenditure to our ministry here. Transfer to other ministries. Transfer to other ministries, how much is that? That is an amount of 750. Is that correct? The transfer to other ministries, is it transfer to other ministries? That one should be 750, yeah? Is that the position? 750? Jeff? Is it 750? Yes. So below that we have basically computer, motor vehicle, land, all those are assets. Revenue from exchange, we have already considered that here as an income. Then we have other revenue, payable, reserves, accumulated fund, cash, reserve, Yes. So in our case, we don't have any other item of expenditure. So let's get the total expenditures here. And basically, we take that to the last column. We less that from our total revenue. We less that from our total revenue. You can see how simple this was, because you just need to know what are incomes, what are revenues, what are expenditures. So this will give us a total of 48. We less it from that, and automatically in our case here, we will have a surplus. We will have a surplus for the year. 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 So the surplus for the year will be how much? The difference between those two values there. The surplus for the year, I'm told, is an amount of how much? The surplus for the year, I'm told here by Zephyr, is an amount of 825. 825. Kezia has also confirmed that. I hope you're getting the same Zido. I hope you're getting the same Meridian. Are you getting the same figure? Are you getting the same figure? Felix, are you getting the same figure? HP. Ni nani anajiita HP? Who is this? Is this Doris? Mwenye anajiita HP? Ama ni nani huyu? Yes, HP. Are you getting the same HP? Okay, so that is confirmed. Yes. So basically, this is now what was required as far as that question is concerned. And basically, the marks allocated there were 5. So automatically, what is marked here are the items of revenue and the items of expenses, or these Doris. Okay. So that basically what was required. So I want us to move now to the other part of that question. You can see how simple this is. Roman 2, the statement of financial position. Statement of a financial position as at 30th of June 2025. As at 30th of June 2025. 30th of June 2025. Now, basically, I've said we prepare this one based on the accounting equation. We start by recording assets. We classify them into 2, and then we less liability. So here we start by recording assets. And specifically, we start by recording the non-current assets. And I hope you can be able to recall, we say that the non-current assets, these are basically the assets which are expected to be used by an entity for a period beyond 1 financial year. Number 2, these particular assets, they are acquired basically to help an entity in terms of doing what? In terms of generating income. In terms of generating what? Incomes or basically revenue. So therefore, those are the assets we start by recording here. So we have a number of non-current assets. We have a number of non-current assets. So which non-current asset do we have in our case here? So which non-current asset do we have here? I think we can start from where we have computer equipment and software. Can we go to where we have computer equipment and software? Can you see that, Doris? Computer equipment and software. Equipment and software. I hope you can be able to see that. Yes. So that basically is an amount of 400. 400. So below that, we have motor vehicles. We have motor vehicles. Motor vehicles having a value of 350. Then below that, we also have land and buildings. Land and buildings. Land and buildings. So for the land and buildings, that is an amount of 5250. 5250. Yes. So do we have any other non-current assets? Do we have any other long-term assets? I can't see any other. I can't see any other. I can't see any other. So what we need to do here is, first of all, we get the total. We get the total, so that then we proceed and record current assets. So this will give us a total of what? This will give us a total of what? This 7, 9. Are you getting 59? The total non-current assets. Total non-current assets. Zephyr. Felix, are you getting 59? Are you getting 59? 59, are you getting 59 here? 6,000. Oh, sorry, 6,000. Yeah, this one should be 6,000. 6,000. Then we proceed. We record the current assets. Now, for the current assets, we have this current number of them. Current assets, maybe you can start from where we have the first non-current assets is basically we have all of them below those balances. We can start from where we have the cash and cash equivalents, cash and cash equivalents, cash and cash equivalent. And maybe someone may ask here, what is cash? Cash refers to any money which is held in the bank account, including cash in hand. And the cash equivalent is our short-term investment. For example, if you have invested in things like what? The treasury bills, which are short-term, that is part of the cash equivalent. Or maybe you have invested in shares trading in the securities exchange market. That is not cash, but is a cash equivalent. You can be able to sell those shares within a very short period of time. So that is basically 750. So below that, we have receivables. Receivables, still this one is a current asset, and that is 300. And then we have inventory. Inventory for what? For consumables. Inventory for consumables is basically an amount of what? Is an amount of 150. All those are current assets. All those are current what? Assets. Do we have any other item of current assets? Any other item of current asset? Any other item of current asset? I can't see any. I can't see any. So what we need to do is basically we get the total current. Okay, in this case, I think we can just go ahead and let's get the total current asset first of all. Total current asset, this and this will come to 900, and that will give us 12. And then from there, we get the total assets. So how do we get the total assets? To get the total asset, we add the total non-current asset plus the total current asset. We add this and this. Total non-current asset and total current assets. I hope here you're getting 12. Are you getting 12? Yes, that is confirmed. So the total assets in our case will be what? Will be 72. And actually, we can denote this using capital A. Our total assets will be capital A. And then from there, I've said, when preparing this statement of financial position for public sector entities, we proceed and we less the liabilities. So to this, we proceed and we record what? The liabilities. We record the liabilities. We record the liabilities. These liabilities, we classify them into two. Non-current liabilities and what? And the current liabilities. Non-current liabilities and current what? Liabilities. Non-current liabilities and current liabilities. Non-current liabilities and current what? Liabilities. Non-current liabilities are the long-term liabilities. And I think we have two basically up there. The first item is transfer from exchequer fees and licenses. And then below that, we have liabilities for long-term benefits. That is a non-current liability. We have liabilities for what? For long-term benefits. For long-term what? Benefit, which is basically how much? 300. And then below that, we have long-term. We have long-term borrowing. So the long-term borrowing is an amount of how much? Is an amount of 1,500. So those are non-current liabilities. Do you have any other non-current liabilities? And I hope if you check on this particular question, you can see similar items are given together. I don't know whether you're seeing that pattern, because if you check, for example, these current assets, they were given together. The non-current liabilities were given together. If, for example, it is like expenses, they are given together. Yes, mostly if you check, you'll be able to see we don't have any other non-current liability. Maybe you can just go through the other items. So below that, we have finance costs, suppliers, wages, other expenses, transfer, computer, motor vehicle, land, revenue, other revenue, payable, reserves, accumulated fund, cash. You can see we don't have any other. So basically what we need to do here, let's get the total. The total. So this one would be 1,800. 18 what? 1,800. And then from there, we proceed and we record what? We record the current liabilities. So the current liabilities, I think in our case, we have, I think I've only seen one. The one or basically the payable, that is. Other than payable, do we have anything else? I can't see any other. I think we only have one, and that is basically what? Payables. Payables. Who can see that amount? How much is that the amount for payables? Kezia. And remember, you say that this one is a liability, not an expenditure. Kezia, I hope you can remember that. How much is that amount? Kezia, give us that amount. Give us that amount. Yes, I'm told by Kezia, this one will be 750. This one will be 750. Yes. And then what we need to do, because we only have one, we don't need to get the total current liabilities. We can proceed and we get the total liabilities. We get the total what? Liabilities. Total liabilities will be this plus this. And that basically will give us 2550. Will give us 2550. 25 what? 50 will give us 2550. 25 what? 50. So having that, then we proceed and we get something called the net assets. Net assets. And in fact, we can denote this using capital B. Total liabilities to be our capital B. So how do we compute the net assets? The net asset, this one is equal to total assets, whatever you have here, minus liabilities, minus total liabilities, what we have there. Net asset is equal to asset minus what? Liabilities. So we take 72 minus 2550. 72 minus 2550. That one will give us what? Notice. It will give us how much? Will give us how much? Will give us how much? 𝐍𝐷 will give us how much? Will give us how much? That one. It will give us 4650. So basically double underline that. We double underline that. So after double underlining that, we finally record what? Equity. So basically I've said equity. This comprises of accumulated fund, which must be adjusted with the surplus or the deficit for the year, plus the reserves. Plus what? The reserves. So the first item we record here is basically the accumulated fund. The accumulated fund. The accumulated fund, which we have there, which basically are given in those balances. I hope you can see accumulated fund is somewhere down there, below inventory, above receivables, and also above cash and cash equivalent. So accumulated fund is given as what? As 1125. That is the accumulated fund at what? At the start. So to this accumulated fund, we need to add the surplus for the year. We add the surplus. But remember, in this case, if, for example, we had a deficit, that one should be deducted. So we add the surplus for the year, and that is 825. So that now will give us the accumulated fund at the end. So this will be how much? So 0, 5, 9. That will give us 1950. Are you getting 1950? Are you getting 1950? The accumulated fund plus the surplus for the year, 1950. Yes, that is confirmed by 0. And finally, I'll say to this, we also add what? We also add the reserves. We also add the reserves. Now, we have reserves still above this accumulated fund, and the reserves is an amount of 27. And the reserves is an amount of what? 27. So we get now the total equity. And this basically equity is another name for net asset. Equity is another name for what? For net asset, simply because we know that from the accounting equation, we say asset and equal to equity plus what? Plus liabilities. So equity. So if, for example, or we make equity the subject of the formula, you can see equity is equal to assets minus what? Liabilities. And actually, we are saying the difference between asset and liabilities, this one is also known as the net asset. So if you take asset minus liabilities, that can be known as net asset. It can also be known as equity. So, yes. So equity is the same with what? The net asset. So the same case here. This total equity is the same with the net what? Assets. Is the same with the net asset. So we add these two values here, which will give us 46 what? 4650. 4650. So, and basically we have said whatever you get here as our net asset, this one, that should always agree with that one. And I hope you can see that is the case. So this is basically what was required there. And equally the marks allocated here were 5 marks. Or 5 what? 5 marks. So therefore, this one was a very simple one. This one was a very, very simple one. Basically, these were just a free what? 3 marks. I don't know whether this was a repetition because we have another question, another similar question, which was tested some time back. I want to give that other question as an assignment. In one of the most recent sittings, I think that question was just the same with this one. Let me see. So August of 2024. Yes, yes. Actually, this question was just like a repetition. So I'll give this question here as an assignment. You'll be able to see the two questions are the same. This one I'll give it as an assignment. And basically this is the question for which sitting here. April 2024. Question number what? Question number 5A. Question 5A. Actually, the two questions are just the same. It's just like a copy paste. It's just like what? A copy paste, because I can see we have motor vehicles, but maybe automatically the values are not the same. Yes. So what I want you to do, this particular question here. I will see whether we are going to do it maybe in our next class. I think we can start with it because we also have other questions. But even before we meet, make sure first of all you attempt it on your own. It's a very simple area. It's a very, very simple area. This is an area whereby you should be able to get all the marks. If you come across a question from this area, you should be able to get all the marks. Sasa, yes. For today, I want us to stop at that point, and I hope those who did the exam for August have already gotten the results. Anyone who did the exam for August, automatically know is no. Therefore, you did the exam for last sitting? I think yes. I hope you have gotten the results. Kezia, you did the exam for last sitting? Lydian, no. Zido, you did the exam for last sitting? Lydian, no. Felix, what about Felix? Okay. Okay, no one who did the exam for... Yes, Lydian, I'll basically try to see whether I'll be able to share the previous recording and also the materials. Yes, I'll be able to share that in the class WhatsApp group. So let's stop at that point for today. We have a nice weekend. We continue from there next week. On Tuesday, we will still be looking on this topic here on public sector accounting. So have a nice weekend. See you on Tuesday. by companies, basically for the company to be able to show the sources of cash and basically the application of cash. So basically what that means is that once you're given a statement of cash flow prepared by a company, you should be able to see how the company generated cash and basically how that particular cash was spent. Now, a statement of cash flows basically should be prepared in accordance with this particular standard, International Accounting Standard number 7. And actually, this particular standard requires that when a statement of cash flow is being prepared, the various activities which are undertaken by the company, basically to be classified into three categories. I hope you can be able to recall those particular three categories. Number one, we have the operating activities. Number two, we have the investing activities. And number three, we have the financing activities. So anytime you are preparing a statement of cash flows as an accountant, what you need to do basically is to appreciate the fact that the activities of the company should be classified into three categories. Operating activities. So what do you mean by the operating activities? These are basically the revenue generating activities which are basically undertaken by a business entity. For example, a business entity may be providing services. A business entity may be selling goods to its customers for that business to be able to generate what? Revenue, or to generate what? Income. So therefore, operating activities, these are the revenue generating activities, e.g. provision of services, e.g. the sales of what? Of goods. Now, on the other hand, when we talk about now the investing activities, these are those particular activities which include acquiring assets and also selling or basically disposing what? Asset. And maybe for those who are doing AFR, and this also include acquiring a subsidiary and also disposing what? A subsidiary. And then we have the financing activities, and basically these are those particular activities which by the end of the day affect the size and the composition of the company's capital structure. So any activity undertaken by the company, it affects the capital structure of the company. That is the size and the composition is a financing activity, e.g. maybe the issue of shares, the issue of debenture, acquisition of bank loan, maybe the redemption of debentures which have been issued by the company, and so on. And then after classifying the activities into those three categories, in preparation of the statement of cash flows, we have to determine the net cash flows from each of these three activities, basically in that order. We determine the net cash flows of a company in that order. How do we determine this particular net cash flow? So to determine this, we take the cash inflow. Basically, when we talk about the cash inflow, this refers to any money which is flowing into the business. Like once the company sells an asset, the company receives money. Once the company issues shares or basically debentures, the company receives money. So the money which is received or money coming into the business, we basically refer to that as a cash inflow. The other rule is that when preparing the statement of cash flow, any amount which is a cash inflow, we record it in our statement of cash flow as a positive. As what? As a positive. So we take the cash inflows, and then to this we less the cash what? The cash outflows. So the cash outflows, basically, this refers to any cash which is flowing out of the business. And the rule is that anytime you are preparing a statement of cash flow and you come across an amount which is a cash outflow, then you record it as what? As a negative. So therefore, to determine these net cash flows, we take the cash inflows as positives, and then we less cash what? Cash outflows. So basically, we deduct the cash what? Cash outflows. That's why we are saying cash outflows. We record them as what? As negative. So by the end of the day, we will be able to get the net cash flow from operating, investing, and also what? Financing. So maybe the other thing you need to remember very fast is that when preparing the statement of cash flows, basically we have two methods which can be used to prepare a statement of cash flows, or in other terms, to present a statement of cash flows. We have the direct method, and also we have the indirect method. And actually, the difference between those two methods, that is the direct method and also the indirect method. Indirect method is basically how we determine the net cash flow from operating activities. That is the only difference. How we determine the net cash flow from operating activities. That is actually the difference between these two methods. So under the direct method, basically, we determine the net cash flow from operating activities using a direct approach. Basically, we go to the cash book prepared by the company. Number one, we take into account the cash received from debtors or customers, which is basically a cash inflow. Then to that, we less the cash paid to the suppliers or creditors. We also less the cash paid for operating expenses. We also less the tax paid and the interest which was paid. We will be able to get the net cash flows from the operating activities. That is now using the direct what method. Now, under the indirect method, we compute the net cash flows from operating activities using what? Using an indirect approach. And actually, what we do under the indirect method, we take the profit before interest and tax, and usually we adjust it with 3 items. The non-cash items, which were added or deducted in arriving at that profit. Number 2, the changes in working capital, basically where we consider 3 items of working capital: receivable, inventory, and payables. And also we adjust that profit with any investing or financing activity item which was added or deducted in arriving at that what? A profit. So basically, I think that is the first thing you need to remember as far as the statement of cash flows is what is concerned. And I think with that particular quick recap, I want us to go straight to a question. And there is a question which has already been shared in the class chat box, maybe for those who are joining us right now. So there is a question which has already been shared in the chat box. So if you can be able to see that question, please confirm that is the question you want us to do. Can you be able to see that question, those who are just joining? If you can be able to see that question, please confirm that is the question I want us to do. Can you see that question in the chat box? Can you see that question in the chat box? I want us to use the question from CPA Foundation level. CPA Foundation level. That is the question 4B of August 2024. Yes, so can someone reshare that question afresh? Evans, please reshare that question afresh. Reshare that question afresh. Reshare the question afresh. Yes, so I think it has already been reshared there. It has already been reshared there. So let's go through it. We see what we are told and equally what the examiner was requiring here. So the question reads, part B, question 4B, it reads, the following are the financial statement of Precious Limited for the year which ended 31st of March 2023 and 31st of March 2024. So we're given Precious Limited statement of profit or loss, which is for the year which ended 31st of March 2024. We have the gross profit, operating expenses. We have other incomes which include interest income received, the gain on sale of investment, and then we have the loss on sale of fund. And then from there we have the interest paid, the interest expense which was paid, and then we have the net profit before tax. We have the income tax for that year, and then we have the net profit after tax. So then from there we have the statement of financial position. We are given statement of financial position basically for 2 years, 2023 and 2024. It is important for you to note that anytime you come across a question for cash flow, always the examiner will give you the statement of profit or loss for the current year. And then for the statement of financial position, that is basically the balance sheet, you'll be given the statement of financial position for the current year. For example, in a case, the current year is the year 2024, and for the previous year. So what you need to note is that the figures which are given here in the statement of financial position of the previous year, 2023, these are treated as the opening balances, whereas the figure we have here in the statement of financial position for 2024, those are closing balances. That's basically what you need to know. So we have the non-current assets, which include PPE, property, plant, and equipment, at cost and also accumulated depreciation. We have the investment, we have the current assets, which include inventory, accounts receivable, cash, prepayment, and then we have the total current asset and the total asset. And then we have liabilities and capital, where we have ordinary share capital, revenue reserve. Revenue reserve, this is another name for the retained profit, or is basically another name for the retained what? Earnings. Then from there, we have the long-term liabilities, which include both. We have the current liabilities, which include account payable, accrued liabilities. And then we have tax payable. And then we have the current liabilities, total equity and liabilities. Then we have additional information, number 1, all the way to note number 7. So what then are we required to do here? We're required to prepare a statement of cash flows, which is for the year which ended 31st of March 2024, in accordance with the International Accounting Standard number 7, which governs the preparation of the statement of cash flows. Now, in this case, number 1, recall what we have said. There are 2 methods which are used in preparation of cash flow. We have direct method, we have indirect method. But if you check on this particular question, the examiner has not specified which method we need to use, whether we use the direct method or basically whether we use what? We use the indirect method. But anytime you come across a question for cash flow, you are given the income statement or the statement of profit or loss, statement of financial position. If the examiner is not specific on which method to be used, always use the indirect method. So the indirect method basically has so many free marks when it comes to computation of the cash flow from operating activities. So that is the first thing you need to do. The other thing, assuming this is a question you are doing in an examination setup, it is not advisable to start with the workings because this where or what make majority of the students to fail in these particular questions. So how do you get free marks, or basically what you refer as the low-hanging fruits? So basically what you need to do is that once you come across a question for cash flow, number one, never start with the workings. Just go straight to what the examiner is requiring you to prepare, because the 16 marks which are allocated there, they are allocated for preparing a statement of cash flow. So if you do all the workings, they are correct. By the end of the day, you fail to prepare the statement of cash flow, you will get 0. So therefore, what you do, go straight to preparing what is required. Basically, any working which you do it per need basis. You are doing a working to determine an item to be posted in the statement of cash flow. So therefore, what we do, we go straight to preparing what is required. And actually, we need first of all to have the title. So the name of this company is Precious Limited. Precious Limited. And basically, this is the statement of cash flows. The statement of cash flows. And basically for the year, which ended 31st of March 2024. 31st of March 2024. Obviously, you must have the title. You must have the title of what you're preparing. And then from there, you need also to remember, in preparing this particular statement of cash flows, we have to determine net cash flow from 3 activities. So can you have those particular 3 subheadings? So basically, always, we start by determining the cash flows from operating activities. That's basically what we know. We start by determining the cash flows from operating activities. So here we need to have 2 columns, and I hope you can be able to see that if you go back to that question, all our figures are given. The figures in the income statement or the statement of profit or loss, the figures in the statement of financial position, they are given in thousands of shillings. So you need to have 2 columns here like that. So then from there, you leave some enough space here, because when computing the cash flow from operating activities, we have so many items which we record here. So leave enough space. And then from there, you have the other subheading for basically determining the cash flow from what? The cash flow from investing activities. And basically, remember, in this case, we have said investing activities are those activities which involve acquiring assets and also selling assets. So what we record here are the assets which were acquired, the assets which were purchased, and the assets which were sold. So we don't have so many items which we record here. Leave just enough space, not a big one. And then from there, we have the other subheading for determining the cash flow from the financing activities. And actually, all the items which we record here, we get them from equity and basically the non-current liability section of the statement of financial position. All the items which we record here, we get them from the balance sheet, specifically at the equity and non-current liabilities. And then down here, we come and we record something known as the cash and cash equivalent. This is cash and cash equivalent balance brought down. And also we record the cash and cash equivalent balance carried what? Balance carried down. Balance carried what? Balance carried down. That's the first thing you need to have anytime you come across this particular question for what? For cash flow. Anytime you come across this particular question for cash flow. And then having that now, I want we proceed and we look on how then do you get the low-hanging fruits. So there are the low-hanging fruits. Remember, we have said that these are the free marks. These are the marks basically you get without any working, without any what? Any working. So basically, the first thing I advise my student to record is this: cash and cash equivalent at the start, and also at the end of the year. So what do you mean by cash? Cash, basically, you can be able to recall, this is cash in hand, cash at bank overdraft, and then cash equivalent. These are the short-term investments, the short-term what? Investments. So basically what we need to do is we go to our statement of financial position under the current assets. We check whether we have cash in hand, cash at bank, short-term investment, and then still we will go to where we have current liabilities. We check whether we have a bank overdraft. So can we do that? The first thing, we go to the statement of financial position, specifically under the current asset. So under the current asset, can you tell me which item of cash and cash equivalent do we have there? Which item of cash and cash equivalent do we have under the current assets? So tell me which item of cash and cash equivalent we have there. Which item of cash and cash equivalent do we have? Do we have under the current assets? Type it in the chat box. Yes, I'm told the first one is basically cash. Is actually what? A cash. You also check, do we have bank balance? No, we don't have bank balance. Do we have any short-term investment there? No. So therefore, and remember what we have said, that we are given statement of financial position for 2 years, 2023, 2024. So the balances we have here, these are opening balances. In other terms, these are what we refer to as the brought down. The brought what? Down. Whatever we have here, these are closing balances. This is what we refer to as the current what? Down. That is also very, very important. Very, very important. So therefore, what we have is cash. So what we do, we take cash, and basically the cash, we take cash at the start from the statement of financial position for 2023, and I hope you can see that is a figure of 2250. And then from there, we go to where we have the current liabilities. We check, do we have a bank overdraft? So under the current liabilities, do we have a bank overdraft? Yes or no? Do we have a bank overdraft? Yes or no? Under the current liabilities. Do we have a bank overdraft? No. But if we had a bank overdraft is basically money which is owed to the bank. We come and we raise it there. So therefore, the cash and cash equivalent at the stand is how much? Is 2250. So we do the same. We do the same at the end of the year. So by now we know that we only have one component of cash and cash equivalent, and that is basically cash. So what we will do, we will take the cash and cash, the cash balance at the end of the year, and basically that is an amount of how much? That is an amount of 69. That is an amount of what? Of 69. Yes, someone to share that question, in the chat box. Someone to share that question in the chat box. Someone to share that question in the chat box, please. Someone to share that question. Someone to share that question in the chat box. Okay, it has already been shared, Janet. There. I hope you have seen it. Yes. So that is the first thing you record. And in most of the cases, what is important for you to note, what is marked in these particular questions are the entries. Are what? The entries. And basically, mostly this particular question for cash flows, how are they marked? This is how these particular questions are marked. So like you can see the marks are located here were 16. So mostly these particular questions will be marked like this. Any 8 correct items here, you are given 2 marks. So mean that if you get 8 correct entries here, you'll get 16. Alternatively, if the question has so many entries, the question can be marked like this. Any 16 entries at 1 mark, and basically you get what? The 16 mark. So it depends with the number of entries. So if a question do not have so many entries, it can be marked like that. If the question has so many entries, it will be marked like that. So therefore, what is important here is not by the end of the day to do so many workings here. What is important when preparing a statement of cash flow are the correct entries you make here. Are the correct entries you make what? In the statement of cash flow. For example, those 2 correct entries, those 2 entries, they are correct. Those are already 2 ticks. Yes. After doing that, then we come back here to where we compute the statement of, or actually we compute the cash flows from operating activities. And remember, in this case, I've said here, we are preparing this particular statement of cash flows using the indirect method. So under the indirect method, we compute these particular cash flows by starting here, or here we start with the profit before what? before tax. When computing this, we start with the profit before tax. Where do we get the profit from before tax? We get this from the income statement. Can we go to the income statement? You give me the profit before tax. How much is the profit before tax from the income statement? How much is the profit before tax from the income statement? So in our case, it is referred as net profit before tax. Net profit before tax. Can you see that one? Net profit before tax? Yes. So the net profit before tax is basically an amount of 450. But if you can be able to recall, we said in computing this particular cash flow from operating activities, we should start with the profit before interest and tax. In other terms, what is known as the operating profit. But if you check, in our case, we don't have that operating profit. So therefore, what we say is that to this particular profit here, the first adjustment which we make, or the first adjustment to this profit, is basically to add back the finance cost, which is also known as the interest expense. The interest expense. And actually, this interest expense is always above that profit. Is always above that profit. So can you see that figure of the interest expense? Yes, the interest expense is the same. That is an amount of 3450. And actually now that will give us the profit before interest and tax. And then from there we say to this particular profit, we need to make a number of adjustments. The first adjustment we make to this profit is basically to adjust it with the non-cash items. We say there's a non-cash item. For you to be able to remember the non-cash item to be adjusted to this profit, just remember that acronym. The acronym is 𝐷𝐿G. 𝐷𝐿G. So this stands for what? This stands for depreciation. This stands for depreciation on property, plant, and equipment. This one stands for impairment loss. Impairment loss on goodwill. Impairment loss on goodwill. A stands for amortization. Amortization of intangible assets. Amortization of intangible assets. Then this one stands for loss on disposal. Loss on disposal. So the loss on disposal is basically whereby the company disposed or sold some assets during the current year, and basically the asset was sold at a loss. They were sold at what? At a loss. And this one is basically stands for gain on disposal. This one stands for gain on what? On disposal. So therefore, what we need to do, we need to go to the additional information. But I think even before we go to the additional information, because most of these items will be given in the additional information, on the face of the income statement, there are a number of items we need to adjust to these. We need to adjust to this profit. So can we go back to the income statement or the statement of profit or loss, and specifically whereby we are given other incomes? Specifically whereby we are given other incomes. So where we are given other incomes, number one, we are given something called the interest income received. Now, interest income received, is that an income from operation? That is the first thing you need to ask yourself, because what we want to determine here is the cash which was generated from operating activities. Now, anytime you're given an interest received, a company receives interest as a result of having invested. So therefore, what you do, because that interest has already been included here, you come here and you less it. So first of all, we can skip all these items, and then we take the interest which was received, interest income which was received, interest income which was received, which has already been added in this profit. So the reason why we are raising this is because this is not an income from operation. So this is an income generated by the company from what? Investing. So you raise it from that profit, and then you come and include it here. So that is the interest income which was received. And remember, this is money which was received. So when recording it here, you record it as a positive. So why are you recording it there as a positive? It is because it is cash which was received, is an inflow. But here we're recording it as a negative. Why? Because we want to eliminate it here from this profit. It is included there, but it's not income from operating activity. So you less it here, and then you bring it there. That is the first item. Then still under the other income, we have the gain on sale of investment. So the gain on the sale of investment. So anytime the company sells an asset, be it an item of PPE, and that item is sold at a gain, So that gain is usually accounted for as an income, but basically we say that is a non-cash item. That is a non-cash item. So take into account it is included there. What do you do? Place it down there. Then also below that, the gain on the sale of investment, we have the loss on sale. We have this. So the loss. So the loss, basically this is 450. You can see the loss in arriving at this particular profit, it has been deducted. It was accounted for as an expense. So, and because this is a non-cash item, what we need to do, we need to add it back. Actually, these non-cash items, basically which we have here, depreciation, impairment loss, amortization, and the loss on disposal, because in arriving at this profit, they had been deducted, what you do, you add them back. But now this gain, you do what? You less it. That's basically what you need to remember. Yes. So you can see that all these are 3 months. All these are 3 months. This is basically what we refer to as low-hanging fruits. These are basically marks which you're able to get in this particular question without any struggle. Without any what? A struggle. You can see so far we have not done any working, but we have so many entries here. Yes. Now, having said, I think we need to go to the additional information because we don't have anything else we can be able to pick from the statement of profit or loss. Let's go to the income statement. Not to the income statement, in the additional information. In the additional information number 1, we are told Precious Limited purchased investment worth 11.7 million during the current year. So this company purchased investment. So if a company purchased investment, remember is a form of an asset. And that's why if we go back to our statement of financial position, specifically where we have the non-current asset, you'll be able to see we have the property, plant, and equipment. We have accumulated depreciation. Below that, we have investment. So we have said those particular activities which involve acquiring and disposing assets, they are what? Investing activities. So that purchase of investment, you come and you record it here. Purchase of what? Purchase of investment. Purchase of investment. So the investment which were purchased were 11.7. And I hope you can be able to remember in all the figures we are given in the income statement of financial position, the last 3 zeros are omitted. So anytime you are taking a figure from the additional information, you must do the same, omit the last 3 zeros. Then you also need to remember our rule here. When preparing the statement of cash flows, we have said this rule is very, very important. This rule is very, very important that any amount which is a cash inflow, we record it here as a positive. Any amount which is a cash outflow, we record it in our statement of cash flow as what? As a negative. So now who can tell us this particular amount here? Once the company purchased an investment, is that an inflow? That particular amount there, is it an inflow or outflow? The company purchased an asset. Is that an inflow or basically outflow? Inflow or outflow? Who can tell us? Inflow or outflow? Yes, automatically this one is outflow. This one is what? Is outflow. So take into account is an outflow. We record it here as a negative. Don't forget, if you record it there as a positive figure, it is wrong because the person is marking will only give you mark if it is recorded as an outflow. We are done with that. Let's move to note number 2. We are told the company sold a new investment that had cost 13.5 for 15.3 million. So we have sale of investment. So remember what we consider here is asset which were acquired, asset which was sold. So in that case, we can say there was sale of investment. There was sale of investment. And basically, once the company sells an asset, what do we consider here? What we consider here is the proceeds. When talk about the proceeds, this is the money you receive after selling an asset. If you sell an asset, how much cash do you receive? So in that case, we are told in note 2, that investment had a cost of 13.5. It was sold for 15.3. How much cash was received in that case? Is it 13.5? Is it 15.3? How much cash was received? You can tell us here. The cash inflow, the sales proceeds, that's basically what we consider here. Yes, I'm told by Evans that the cash received here is 15.3. 15.3. Eunice, yes, that is very much correct. 15.3. And then 15.3, this is an inflow. When you sell an asset, you receive money. You sell an asset, you receive what? You receive money. You receive money. Yes. So basically, that is it. That's what we need to recognize here. So we are done with that. Let's move to note number 3. We are told during the year, a new machinery worth 18 million was acquired Was what? Acquired. That is also another free entry here. So the company acquired a machine. So once the company acquired a machine, that is still an investing activity. So we say there was acquisition of what? Of a machine. There was acquisition of a machine. You can see the number of entries we have in our statement of cash flows, yet we have not done any working. Have we done any working, Kelvin, here? Have we done any working, Eunice? Have we done any working events? We have not done it. And you can see the number of entries which we have. So because I've said what is marked in these particular questions are these entries. This is basically what we refer to as the low-hanging fruits. This is basically marks you get without a lot of struggle. So then you are told in the same point number 3, sentence 2, some item of property, plant and equipment at a cost of 1.5 and accumulated depreciation of 300,000 were disposed for 750. So many free marks here. So we have disposal. Disposal, remember, is the same with the sale. Is the same with the sale of an item of PPE. What do we consider here? What we consider here is the proceeds. So that item of PPE which was disposed, we are told it was disposed for how much? Can you see the sales proceeds here? So that item which was disposed, was it disposed at 1.5, 300 or 750,000? It was disposed for how much? What is the sales proceeds? That is basically what we consider here. Yes, the amount which we consider here is 750. 750. The sales what? The sales proceeds. So basically we are done with that point. Let's move to point number 3. Point number 4. We are told included in the operating expenses for the year which ended 31st of March 2024 is depreciation charged, and the depreciation charge for the year which amounted to 5,550,000. So in our case, we come back here, we are given this depreciation, which is 5,550,000. That is another free entry. So, and we said that this is a non-cash item. It was deducted in this profit, we add it back. That's when we say this part, these 4 items there, we add them to the profit. So we are done with that. So we move to point number 5. We are told the company issued bonds worth 15 million at a face value in exchange of a plant asset on 31st of March 2024 and repaid bonds worth 7.5 at the face value, at the face what value. Now in that case, we are given 2 transactions in one point. One, we are told the company issued bonds. Bonds are basically the same with the debentures. So bonds are the same with the debentures. So mean that if you go to the balance sheet, to the statement of financial position and the non-current liabilities, you should be able to see bonds there. And I hope you can see that in our statement of financial position and the non-current liabilities, we have both. Bonds are basically the same with debentures. We are told that there were some bonds which had a value of 15 million, which were issued in exchange of a plant. Let me first of all ask, is this, or do we have any movement of cash there? The moment the company issued bonds in exchange of an asset, do we have any inflow or outflow to the company? Do we have money flowing in or money flowing out? You issue bonds, you receive an asset. You issue bonds, you receive an asset. Is there any movement of cash there? There is no movement of cash. So therefore, what is important to note is that when preparing a statement of cash flow, actually from our definition, I said, it is prepared to show the sources of cash and the application of that cash. How was the cash generated by the company utilized? So therefore, in preparing a statement of cash flow, any transaction which does not involve movement of cash, any transaction which does not give rise to cash outflow or cash inflow, we don't consider it here. Sasa, yes, like that transaction will not be considered here. It's a non-cash item. But also on the same point, you are told the company repaid bonds. So when talk about repaying bonds, you see bonds are issued by the company for the company to borrow money. So the company usually will have agreed with those who will buy bonds that they will be given back their money after a number of years. For example, the company can issue bonds having a life of 5 years. So meaning that the holders of the bond will be given back their money. In other terms, the company will pay back those particular bonds at the end of the 5th year. So once the company repay bonds, that is a cash outflow. And where do we consider that? We consider that here. That's why we said all the items which you record here, we get them from equity, non-current liabilities. We know both are part of the non-current liabilities. So here we will come and we say there was a repayment of bonds. There was a repayment of bonds, basically which had a value of 7.5. And this is cash outflow. The moment the company repay back the bonds which had been issued that involve cash what? Outflow. So we are done with that point. So let's move to point number 6. And you're told the company issued 2.25 million ordinary shares of shillings 10 per, basically per value. So where do we consider this? This one is considered here. And basically, can you go to where we have, because that basically affected the share capital. Let's go to where we have share capital, share capital, share capital. And basically, in that case, you can see the share capital increased because remember, in our case, we are given a statement of financial position for 2023. I've said these are opening balances, and 2024, basically, which you have said are closing balances. So you can see the ordinary share capital at the start was 47 to 50, and then at the end of the year, the share capital increased. So the reason why we have an increase in share capital is because the company issued shares. So who can tell us how much is the increase here? The increase is how much? The increase, that increase in share capital, yes, I'm told by Evans is 500. So basically, as per point number 6, we are told this increase was due to issue of how many shares? The company issued 2250 ordinary shares, each share having a value of 10. So if we multiply this, the value of each share with this one, you'll see that will automatically give us that amount. So when the company issues shares, that one is considered here is a financing activity. The company issue a share to do what? To raise finances. So we say there was issue of ordinary shares. So how much amount was received? 22.5. So the amount received by the company is a cash what? Inflow. So we consider that here. We consider that here. Yes, we consider that there. So then after that, we move to the last point. Number 7, the company paid cash dividends of 1.2. This was a very, very simple question. Almost everything is provided. So once the company paid dividends, those dividends paid are recorded here. So we say cash dividends paid. Cash dividends which were paid how much? 1.2. So the moment the company paid dividends, that is a cash outflow. That is a cash outflow recorded here as a negative. Recorded there as what? As a negative. Are we done with the notes? Yes. Can you see the number of entries we have here? Even if, for example, the question was marked like this, because this one automatically, you can see it has so many entries. So automatically, for every 16 ticks, 16 correct entries, you get a mark for each. And basically, by the end of the day, you get how many marks? 16. Can you see the number of entries we have? Basically, we have not done any working, but you can see the number of entries we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. If you decide to read that question like that, you'll be having all the marks. You'll be having all the marks. And basically, that's a question which you should be able to do within not even more than 30 minutes. Because the other thing, maybe for those who are doing the CASNEB exam for the first time, so you'll come across a question with 5 marks. 5 questions, sorry, 5 questions. You're given 3 hours. So if you take 3 hours times 60, that basically comes to a total of 180 minutes. 180 minutes. So this basically to handle how many questions? 5. So if you take 180, you divide with 5, basically this will give you 36. So it basically means that this question should not take more than 36 minutes. More than 36 what? Minutes. That's why it's basically important for you to know the approach to use, because if by the end of the day you start with doing the workings and then later on you prepare this, you'll spend a lot of time. So you may see that you're spending one full hour to do one question. And basically, remember, you have 4 other questions. So that's why it's very, very important for you to be able to know the approach to use in doing these questions in an exam. Other than knowing the approach, number 2, you should also be able to know how to harvest the low-hanging fruits, how to get the free marks. The free what? The free marks. Now, after doing that, there are other free marks here you should always get. You should get down here. And basically, that is in relation to the changes in working capital. These are also free marks. Changes in working what? Capital. Now, here, remember we consider majorly 3 items. 3 items. And for you to be able to remember the items we consider here, Just recall that acronym. Just recall that word. Just recall this acronym here. RIP, receivables, inventory, and what? And payables. That is basically what we do, what we consider here. So Juma is asking, so workings don't carry any single mark. No, Juma, workings do not carry any single mark. In fact, having marked these papers for a number of sittings, I know those who mark, the moment you start with the workings, you just put cross line like that. So if you, for example, you have the first page and the second one is working, just a cross line like that. So the person who is marking this question for you will be checking, did you prepare the statement of cash flow? And now, if you prepared this, he will come and check these correct entries. So that's where the marks are. Never start with workings. Those workings, by the end of the day, they do not earn you any marks. They just consume a lot of your time. And I've said any working you are doing here, do it per need basis. You are computing an item to be posted here. Don't compute something which is not required to be posted here. Do all the workings per need what basis. Because knowing that approach, Juma, is very, very important. It will save you a lot. It will save you a lot. Yes. Let's come back here now. Let's come back here. I want us to still do another question like this. So here we consider 3 items: receivable, inventory, and payables. So receivables, inventory, and payables. But basically I've said, remember this acronym. Not less in piece, but this one stands for the receivables, inventory, and what? And payables. Now, what we need to do basically here is to do what? Is to determine whether there was an increase or decrease as far as these 3 items are concerned. Now, to make it very simple, here there is a formula I give my students. So here we take this. I'll be able to explain what you mean by that. O minus C. And then here C minus O. Yes. So just remember that. O minus C, O minus C, C minus O. So what is this? This is opening balance minus closing. Opening balance minus closing. Closing balance minus opening. So you apply that formula. Whatever you get by applying that formula, if it is a negative, you record it as a negative. Whatever you get by applying that formula, if it is a positive, record it as what? As a positive. Yes. So we start with we go to where we have our statement of financial position under the current asset. We know inventory and receivables is part of the current asset. So can we start with the first item? And that is the inventory. So we will take the opening, which is 16.5 minus the closing. Opening minus closing. 16.5, which is the opening, minus closing, which is 21.6. 21.6. What do we get? What are we getting here, Eunice? Yes, we are getting negative 51. So record it as a negative. That is an outflow. That is what? An outflow. And basically that is inventory. That is what? Inventory. That is the inventory. That is the inventory. And then from there, we do the same. We do the same for receivables. Receivables, we do the same. Opening minus closing, 82.50 minus 70.50. So we get positive what? Positive 21. Positive 21. So we have that. But now, before we move to receivables, to payables, I hope you can also be able to see under the current asset. Below cash, can you see we have prepayments? Can you see we have prepayments? Yes. Now, prepayment is basically part of receivables. It's part of what? Receivables. So in case under the current asset, in most of the cases, will be given the account receivables, and other receivables. If you're not given other receivables, the examiner will give you prepayments. Other receivables can also be known as what? Prepayment. So what we consider here is the trade or the account receivables and other receivables. So in case you're given prepayment, also you have to consider that here. Are we together? Yes, because this is one of the items most of the students will not consider here. So prepayment, basically I've said is the same with other receivables. We are going to use the same formula. Opening minus closing, because the same with the receivables. So can you do that? Opening minus closing. Opening minus closing, what are you getting? That is giving us negative. Negative 600, eh? Negative 600. Yes, I'm waiting for the answer. I'm not getting the answer here. Please give me the answer. I'm saying under the current asset we have, below cash we have prepayments. Below cash we have prepayments. We have prepayments. We have prepayments. It is positive, eh? Yeah, it is positive. It is positive. It is positive. It is positive. Okay. So then we got where we have current liabilities. We consider payables. Current liabilities, payables. For payables, we use this formula: closing minus opening. Closing minus opening. Closing, which is 75, minus opening, 6450. 6450. So which is giving us what? Which is giving us 1050. Are you getting 1050? I'm not getting the answers here. I'm not getting answers. Juma, give me the answers. Eunice, Paul, give me the answers here. Give me the answers. Give me the answers. Hussein, Felix, I'm waiting for the answers. Zipporah, give Morimu the answers here. Give me the Morimu the answers. Okay. Yes, that's basically what we have. It is also important here also under the current liabilities. Under the current liabilities, just like what I've said under the current assets, under the current liabilities, you also need to check whether you are given something like accrued expenses or maybe accruals. So what else do we have there? We have, yes, there is something also we are going to consider here, and that is accrued liabilities. Now, the accrued liabilities, that one is the same with the accruals. So, yes, other than considering the payables, you also consider other payables. Other payables can be accruals or maybe accrued expenses. So we also consider that here, and that is the accrued liabilities. Accrued liabilities. Accrued liabilities, we use the same formula here, this one, closing minus opening. Closing minus opening, closing 18 minus 1350, which will give us what? 450. 450, is that what you're getting? 450? Yes, 450, which is basically a positive. That's what we consider there. Then I think we're almost done. Two other items which are also important here. Number one is the tax paid. The tax paid, and number two, the interest or the finance cost which was paid. Now, for the tax which was paid, this one we need to do some working. So which is not complex, because what we consider are two items. One, if we go to the income statement, we have the income tax expense for the current year, which is 1050. And then if we go to where we have current liabilities, we have tax payable. So how do we compute the tax which was paid? To compute the tax which was paid during the current year, I want you to be very keen. We take the accrued tax at the start. At the current liabilities in the balance sheet, how much tax was payable at the start of the year? The tax payable at the start of the year was how much? Was 750. So this is the tax the company was supposed to pay at the start. And then to that, we add the tax which was payable during the current year from the income statement. From the income statement, our company was supposed to pay a tax of 1050. So this is the total tax the company was supposed to pay during this year. And then the tax which are not being paid at the end. The tax which are not being paid at the end is what we have in the balance sheet under the current liabilities, and the tax which are not being paid was 450. It basically means that the difference here is the tax which was paid. So this will give us tax paid of how much? I've taken the tax the company was supposed to pay at the start, the tax the company was supposed to pay during the current year, and then I've deducted what are not being paid at the start. And basically that will give us what? 1350. And then for the interest which was paid, this one I think is quite straightforward. You consider two items: the interest expense in the income statement, which was this one, and still you go to where we have current liabilities. You check, do we have any accrued interest? In case we have accrued interest under the current liabilities, you use the same approach we have used for tax there. You should take the accrued interest at the start plus the interest in the income statement, this one, minus the accrued interest at the end, which basically give us what? 3450. That is basically the tax which was paid. Not the tax, rather, the interest which was paid. And in our case, we are done. That question, don't even bother trying to add anything. Don't bother adding anything. The person who is marking your paper will be interested with these entries which we have here. He will be interested with these entries, so he will mark these entries. These what? These entries which are here. These entries which are here. These are the entries which will earn you the marks like that. Not even the workings. Not even the working. So that is basically what will be marked. And therefore, as you practice, can you try to use this particular approach here? This basically will save you. This will do what? Will save you in an exam. This will save you in what? In an exam. I want us to do another question. I want us to do another question for cash flow. I want us to do another question for cash flow. Another question for cash flow. Another question for cash flow. For cash flow, we can pick another one, just a random one. I want us to go to the question for August 2023. August 2023. August 2023. August 2023. August 2023. August 2023. Still from CPA foundation level. Still from CPA foundation level. CPA foundation level. CPA foundation level. Yes, and maybe for those who are joining the class, our class here for the first time, who are not part of our students. So our block revision actually started today. This should be our first class for revision for financial accounting, and yes, financial accounting. So if you know of 𝐎𝐶𝐒 who is basically preparing for August 2025 exam, is not well prepared, you can basically talk to him or her to join us, to join our revision. Right now we have an early bird discount. Basically, if a person pay for our blocks, we are just charging as low as 1,500 per word per unit. So basically, this will help you in terms of accessing our revision for the next 4 weeks. So our revision classes will take place from today, which basically is 21st of August up to 16th. This is the 21st of July up to 16th of August. So basically, this will be a 4-week marathon for revision classes. So if you know someone who is preparing for this exam, the August exam, is not well prepared, or maybe he wants to prepare, so you can talk to him or her basically to join our revision classes. I've said we are charging 1,500 for all the units, but maybe for those who are doing BDA, Business Data Analytics, this is an exit paper in CPA. For that paper, we are charging 2,000. That is an early bird discount. It will expire tomorrow. So if you take the advantage of the discount, basically that will be better. So from tomorrow, the amount now will go up with 500. So that question has already been shared here by Evans. August 2023, which is question number 4. August 2023. Question 20. Question what? Question number 4. So what are we told here? The question reads, we are told the following information was extracted from the financial statements of Biashara Limited for the year which ended 30th of June 2023, 30th of June 2023, 30th of June 2023. So we are given the statement of financial positions here. That is the statement of profit or loss for the year which ended 30th of June 2023. And then we have the statement of financial position for 2023 and basically 2024. So in that case, we have said 2022, the figures given there are opening balances. 2023 and the closing what? The closing balances. The closing what? The closing balances. The closing balances. So we have basically that statement of financial position. We have the additional information, number 1, all the way to note number 5. So what are we required to do here? we are required to prepare the statement of cash flows for the year which ended 30th of June 2023 in accordance with IAS 7. Is the method to be used specified? No. But I've said if you come across a question for cash flow and you're given the income statement of financial position, always use the indirect method. So and then from there, we're required to comment on how 𝐉𝐎𝐈𝐍 Limited has generated and used its cash and cash equivalent for the year. So you can only be able to comment on that after preparing the statement of what? Of cash flows. After preparing the statement of cash flow. So we have said never start with the workings, just go straight to what is required by the examiner. So the name of this company is 𝐉𝐎𝐈𝐍 Limited. And this is the statement of cash flows. The statement of cash flows, which is basically for the year, which ended 30th of June 2023. 30th of June 2023. 2023. So here we start by determining the cash flow from operating activities. Cash flow from operating activities. We need to have two columns here. And I hope you can also be able to see our figures there are given in thousands of shillings like this. Are given in thousands of shillings. Are given in thousands of shillings. Yes, so we have said we leave enough space here. Then we have the other subheading for computing the cash flow from investing activities. And I hope you can be able to recall investing activities. These are the activities involving acquiring and disposing assets. And then we have the other subheading for determining the cash flow from the financing activities. Remember, I've said all the items which we record here, we get them from equity and current liability section. And then down here, we come and we record the cash and cash equivalents. Cash and cash equivalents at the start, and the cash and cash equivalents balance carried down. So that is the first thing you need to have there. That is the first thing you need to have. You need to have. So if you have that, I want us to now move together. We prepare this together. So do you have that format with you? If you have that format with you, I think we can move together. Do you have that format? Do you have that format with you? If yes, type that in the chat box. Yes. So we have said we always start by recording what? The cash and cash equivalent at the start and also at the end. So can we do that? We go to where we have the current assets. In the statement of financial position, we determine how much was the cash and cash equivalent at the start and also at the end. I've said we consider a number of items: cash in hand, cash at bank, short-term investment. We go to where we have current liabilities. We see whether we have a bank overdraft. So under the current assets, so I can see we have short-term investment. That is the first thing we need to consider here, short-term investment. The short-term investment at the start. Remember, 2023 is the current year. These are the closing balances. 2022, these are opening balances. That is very important. So the short-term investment at the start is 50/40. So below that, we have cash in hand, which is 25/80. And then we go to where we have current liabilities down there. We check, do we have a bank overdraft? Yes or no? Yes, I can see we have a bank overdraft. The bank overdraft at the start, which is 2022, is 39,240. And in this case, I've said a bank overdraft. We take it here as a negative. We take it here as what? As a negative, because this is money which is owed to the bank. we get the net amount. We get the net amount. That will give us a net amount of what? We have 5040 plus 2580 minus the overdraft, 39 to 40. 39 to 40. What are you getting here? What are you getting here? I'm getting negative